Hi there, you're watching Dukascopy TV. I'm Monica Gibson, and joining me down the line for an economic update on Sweden is Anders Brunstedt. Anders, one scenario gaining a bit of airtime of late is that Sweden's too big to fail banks may be told to hold even larger reserves. Given that they already face stricter capital rules than their competitors elsewhere, is this really necessary to stimulate growth without creating a bubble?
First of all, I think in principle the larger banks have already prepared for this. So and you know the Basel rules, etc. So there are some measures already taken here within the bank sector. So that said, and then also that the details aren't really known here on new measures on macroprudential. I think the impact on bank operations and on rates, I think that's all is very uncertain still, I would say. So we're not fearing any really turmoil in regard to these new measures at all. And regarding growth stimulation and the bubble, etc. Well, I think it's clear to us that if recent trends would persist, the risk of a backlash is fairly obvious, and we think there's some cooling off in the housing market and cooling off also in credit growth that is needed in years to come. And well, in retrospect, monetary easing has already played out here over the last few years, and we think a growth recovery is in the offing. That is our forecast currently.
Renfield recently recommended tax cuts are good for jobs, to target the average person and strengthen Sweden at a time when the European economy remains weak. Do you agree with this sentiment?
Well, that's would be perfectly fine for us, because that the Eurozone will be stuck with structural problems. That is something we're convinced of, and also global growth prospects aren't really booming, really, although the U.S. and emerging Asia look better. And in terms of public finance in Sweden and fiscal sustainability, those things shouldn't be an issue. So we think there's clearly some room for fiscal boost here, and whether that should be on the tax, the income side or expenditure side, well, that's normative. But I think evidently tax cuts would be fine steps towards further structural reforms for Sweden. Yeah.
According to analysts, Swedish investors are waking up to the fact that should the US economy indeed be on firmer footing, there is no reason to believe that Riksbank should move any slower than the Fed. The first repo hike is expected in 2014, but do you think Riksbank will be one of the first to follow suit?
That's funny. It's a coincidence because what you're referring to, that's very much in line with our outlook on things here globally for Sweden. We have had rate hikes by the Fed sometime mid-2014 in our scenario for quite some time now. And also we think the Riksbank will deliver its first rate hike sometime at the same point in time, pretty much as the first Fed hike. So I think a looser Fed policy that clearly paves the way for a normalization of Swedish rates, and that would be desirable given the long phase of very easy monetary policy in Sweden.
That being said, it could also be difficult for the Riksbank to diverge unduly from the low interest rate environment in other countries without triggering a sharp appreciation in the krona. Some analysts are expecting the SEK to reach its strongest levels since 1992. But what is your outlook?
Well, we think there will be likely some market currency swings here going forward, and regarding the US dollar versus the Swedish Krona, we expect a rather strong depreciation towards the US dollar, given the divergent policy trends here. But on the other hand, we have this very likely appreciation towards the euro, given also the structural problems within the eurozone and divergent trends from monetary policy. So we have those two trends, and in our currency forecast, we conclude that all in all, the futures SEK rate will remain fairly close to the current strength, so to speak, given that you look at a basket of currencies.
Anders, thank you so much for your time and insights today. Well, viewers, that's all from me for the moment, but today I'll be bringing you an interview looking at South and East Africa, so please do click back for that. Goodbye for now.